Hello, ladies and gentlemen. Good morning to you. If you can see my screen and you can hear my voice, kindly type in hi in the comment section so that I can confirm that we are all on the same page so that we can get the session started. So if you can see my screen clearly and you can hear my voice, kindly type in hi in the comment section. Okay. Oh, good morning, Carrie. Good morning, 359. Good morning, Ohema. Thank you, Steamroller. Good morning to you. Good morning, Ali Domi. All right. Thank you very much. Thank you for that confirmation. So, good morning to all of you. Trust you had a wonderful night rest. All right. So, let's get this started. Welcome to yet another promising session of Extra Speed Live, hosted by my humble self. And in the next 1 hour, I will be taking you on a trading journey where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us during the New York session today. But before we go into the details of what our expectations are today, definitely we are going to be looking at how the pairs that we executed yesterday has been doing so far. And if there are any updates regarding regarding the current setup, I will be sharing during the course of the session. So I would advise you to stay tuned in so that you don't miss out on any of these advices, follow-up details I might be sharing during the course of the session. And if you have any pair or commodity or options or cryptocurrency that you want us to look at, feel free to drop it in the comment section and I will try to inculcate it into our plans for today. So once again, I welcome you all and let's get the session started. So the first pair we are going to be looking at today is the USOil. And you have the USOil on the chart right now, and it appears that we are already in profit at this point. And if you remember, where were we yesterday? We were around this point yesterday. We were around here, around the $83 mark area yesterday. This is where we were yesterday. And one thing I said yesterday was that if you had missed this move, that is the breakout of the structure here, the channel we identified, and then we had the structure around the $82 level, which we were supposed to be using as our guide for bullish momentum for this week. So I told you if you had missed that move, then definitely we want to wait for price to give us another opportunity to join this bullish wave, and we had a retest of structure here during the New York session yesterday. In fact, we had a couple of rejection of this area exactly right around the 50% of the previous impulse leg. And what happened afterward was a massive move as price has continued to find higher highs and higher lows, and currently price is right around the $84.50 level. So if you are taking advantage of that move, first of all, I want to say kudos to you for being on standby to be able to identify this opportunity. And if you are in, you will definitely be in about 200 pips on the point right now. So well done and congratulations for that. So what's the next thing we want to be doing at this point in time? So the next thing we want to be doing here is to move our stop loss to protect our position. At least we've made some money here. So what we want to be doing right now is to lock in our profit. So the most appropriate area that we should be moving our stop loss should be somewhere below the $83.50 area. That is somewhere around here, around the $83.50. Below the $83.50 area looks most appropriate to move our stop loss, as we have the structure here, and this will be dovetailing to about 835 pips thereabout, which is not bad anyways. And let's see if price will continue to rally to the upside. So that's the first thing we are doing here. And what we're going to do next is to look at the possibility of if there are any opportunity for those who had missed out on this trade yesterday. So the first thing I want to do here is to scale up to the daily time frame so that we can all be on the same page, especially for those who are not part of the session yesterday, so you can understand and have a purview of how we got to this point in the market. So scaling up into the daily time frame right now. So what do we have on the daily time frame? I'll quickly do a summary of what we were looking at yesterday and how we got to the point we are right now. So this is the daily time frame here, and if we look at what has been happening since the beginning of the year, we all understand that price has been on a very strong bullish momentum, and this is evident after connecting the series of higher lows here, which resulted in that bullish trend line that we have identified at the beginning of the week. However, if we zoom closely into the current structure here and zoom into what has been happening in the last 3 to 4 months now, that is since the month of June, we can see that price has consistently found lower lows and lower highs, hereby collapsing right back into the bullish trend line here in the early days of the month of September. And as a result of this, we were able to connect a series of lower highs here to give us this resultant bearish trend line. And what do we have afterwards? So during the course of the month of September, we saw the breakdown of that bullish trend line. First of all, we witnessed the breakdown of this key level at $85 mark. And the reason why we had that key level at $85 mark is simply because of how participants in this market has continued to respect that level in the past. And if we look at what has been happening since the beginning of the month of August, we saw how buyers has used this level as a leverage for buying opportunity. And what happened during the early days of the month of September was a breakdown of that key level, though we had price come back a little bit, but was met with stiff resistance from the sellers as we finally saw the breakdown of that key level, which led into the breakdown of the bullish trend line that we identified earlier. And from a technical standpoint, we expect that price is likely going to come back into that bullish trend line with the intention of doing a trend continuation to the downside. But what has happened here in the last 24 hours is quite the opposite. As yesterday we were saying, we want to see how price is going to relate with this bullish trend line in such a way that are we going to be seeing multiple rejection of this bullish trend line to send price go to the downside, or are we going to be having a breakout of this bullish trend line to send price going to the upside? And definitely if we finally have a break above of the $85 area, this is more or less a bullish signal that we want to be taking advantage of. So what happened here in the last 24 hours was quite interesting, as we saw our price climbed right above that bullish trend line. So what we did afterward was to scale down to the 1 hour time frame, where we wanted to look at how participants in this market has been relating with the area around the $81 area and the $82 level. So what we noticed here on the 1 hour time frame was a huge gap that started the week, though price closed last week at around the $79.50, but the week began at the $81 area, giving us a bullish gap. And that bullish gap was one of the scenarios, one of the signs that we saw that made us think of a bullish momentum. And one thing we observed during the early hours of the week was that price was caught within a consolidation phase right between the $81 level and the $82 area. So we saw this area yesterday, and we saw this impulsive move that broke out of that structure to emphasize the strength of the buyers at this point. And also this impulsive move was more or less a signal for us. And what we said afterwards was, okay, fine, if we had missed this move, what we are going to be looking forward to is a retest of structure in such a way that we look out for patterns on lower time frame to join the bullish momentum. And lo and behold, that is exactly what has happened so far. So now that we have the scenario right now, and I've told you to move your stop loss to break even, let's see if there is any opportunity that we could take advantage of to add more position to this trade. That is for those who are already in this trade, and for those who are not in this trade, let's see if there is any possibility of adding more, joining this potential rally. So now with the current structure we have here, looking at what has been happening since the beginning of the week. So we had the price started the week at around the $81 level. That was around here. So we saw price started the week here, and price has continued to find higher highs and higher lows. So what I'll be doing right now is to connect a series of higher lows here to give us a resultant bullish trend line that we will be using to guide our action for this week. So if we connect the series of lower highs here, we have something like this. Hold on a second. Let me pull this up a little into the future so that we can use this as a yardstick for any bullish momentum if there is going to be any today. So right now, this is what we have here on the 1 hour time frame. So we have a bullish trend line here. And let me thicken this to emphasize the importance of this bullish trend line for this week. So I'll be giving it a blue color. So this is what we have here right now. We have a bullish trend line and price has continued to respect this bullish trend line since the beginning of the week. And there is an opportunity here to take advantage of a bullish momentum around the $83.50 area. So if you had missed that, well, let's see if we could see another opportunity. Now look at what happened here yesterday during the New York. I think at the beginning of the New York session we saw a sharp rejection of the $84.50 area here, and then during the early hours of the UK session today we saw a multiple rejection of this area as well. So what does this tell us? It tells us that this is more or less a significant level that we want to be looking out for. So what I'll be doing right now is to identify that area using my line. So we should be having something like this around this area, and let's label this point for the sake of clarity. So we have this area sitting right at the $84.50, right? So we have the $84.50 level right here. So this is going to be a yardstick going forward. So now remember we had this rejection here yesterday. We had another rejection here in the early hours of today, which tells us there is a potential of selling opportunity coming in from that area. So one thing I want to be doing here is to wait for a signal, and that is going to be a breakout of the structure where I see candle closing right above that level. So if I have my candle close right above that level at this point, then that is likely going to be a signal of a bullish momentum. But remember, we don't want to get too excited at the sight of such a signal, as we want to wait for confirmations to happen. And the confirmation is likely going to happen in the form of a retest of the structure, or probably respect that bullish trend line one more time, where we look out for patterns on lower time frame that supports a trend continuation to the upside. So if you had missed the trade we took advantage of yesterday, or you missed the trade that was taken here during the early hours of today, one thing I'll be suggesting is to wait for price to break above the $84.50 area, do a retest of structure on lower time frame, then we can actually join the rally from that point. So as at yesterday, we had our TP target right at the $85 area, which dovetails to something about around 320 pips thereabouts. However, going into the New York session today and judging from the current structure we have here, we want to be extending that TP so that we can maximize the profit we are going to be seeing on this US oil pair. So what are we going to be doing right now is to scale up a little bit to the 4 hours time frame to see the current structure we have and how we could actually extend the TP. So looking at the previous impulse leg here, so we have a previous impulse leg layer on the 4 hours time frame. That is this move to the downside. Price started at around the $90 area last week, then dropped to as far as the $77 mark. So what I want to be doing here is to bring out my Fibonacci retracement tool, and let's see if there is a possibility of pushing our take profit target to the 78.6% of this previous impulse leg. And there we are. So we have the 78% right around the $88 mark. So let's just put our TP target around the $88 mark, which will be dovetailing to a maximum of 580 pips for those who have been part of this trade yesterday. So this is what we are going to be looking forward to as we head into the New York session today. So let's see if price is going to continue to climb to the upside. And one thing I want to make mention here is that if price breaks above the key level at the $85 area, what we want to be seeing here is to see this move as a bullish signal, after which a retest of structure will be giving us further confirmation to add more position to this trade. And as you can see, we can see that the current market structure is giving us multiple entries, the possibility of multiple entries. So we need to be on standby and be very cautious to be able to take advantage of those moves when they finally happen. So this is what we are going to be looking at on the US oil. So if we have a breakout of the $85 level, we want to be adding more position to this trade. Remember how important this $85 level was on the daily time frame, which I showed you. Let me show you one more time so that you can have a better understanding of what I'm talking about here. So you can see what we have here on the daily time frame. We saw the $85 mark has been a major determinant of price action since the month of August this year, before we started seeing the breakdown of the structure during the month of September. So let's see how price is going to relate to this level today. Is price going to break above the $85 mark, or are we going to be having multiple rejection of this level? So if we have multiple rejection of that level, we can see how that level also share a confluence with a bearish trend line that we identified earlier. So if we have multiple rejection or probably pattern evolved into a reversal pattern from that area, then definitely we want to be looking forward to selling opportunities. But if price breaks above that $85 mark, then we want to be looking out for buying opportunity at a retest of that structure. So this is how we intend to trade the US oil for today. If you have any question regarding what I have just explained so far, feel free to drop in your inquiries in the comment section. So I'll be taking the next 10 to 15 seconds to read through the charts to see if there are any inquiries, and if there are none, we shall be moving on to the next pair. Okay, Jen Marie is saying that the screen is a bit small and can't read what I'm talking about. Well, I'm talking about the US oil at the moment, and regarding your screen being small, I would suggest that you probably reorientate the screen of your phone to a landscape format so that you have a larger view of what we are talking about here. So try and do that, please, and I think it's going to be better for you when you do that. Okay. All right, 245, good morning to you. You're welcome. You're new here. Glad to have you around. And well, what we simply do here is to gather here on a daily basis to get ourselves prepared for the New York session. So what we do here is simply look at random pairs, look out for trading opportunities lining up for us during the New York session. And if you have any pair you want to trade and you want us to look at, you are free to drop it in the comment section, and I will try as much as possible to inculcate it into my plans for the day. So this is what we simply do here. We come here together, analyze, and get ourselves prepared for the New York session. So that is that. Okay, Kairu Karim, good morning to you. All right, okay. So in the absence of no questions, let's move on to the next pair. So Dex Dollar, good morning. Mac 08787, good morning to you. So let's move on to the next pair. And the next pair we are going to be looking at is which one of this pair that we did yesterday. Let me see. Okay, the next pair is going to be the US Tech. And on the US Tech, I actually hit my take profit target yesterday, and I hope you did as well, as we had a very good price movement in our favor in the last 24 hours. So this is what we had here yesterday on the US Tech. Let's zoom into the current structure we have here. And what we were around this point yesterday, remember? We were around here yesterday, right above the $10,970 level. And what we saw yesterday was quite interesting. We saw our price started the week, and then we saw our price was caught within a channel. Since it tested the $10,800 mark, we saw our price was caught within a channel. And what we were looking forward to yesterday was a breakout or breakdown of this channel to give us a signal. And what happened at the early hours of the New York session was a significant breakout of the structure. Price came back to do a retest of that $10,970 level, which was supposed to be our yardstick for bullish momentum, and boom, price went as far as the $11,300, which was where I took my profit with about 300 pips. So if you are taking advantage of this move yesterday, kudos to you for identifying and being on standby to be able to enjoy this rally. I don't know if you actually extended TP as I did, because when price got to this point, I began to extend my TP, which led into this. And if you are still in this trade, I know there are some people who would have been extending their TP as price continued to move to the upside. If you are still in this trade, well, kudos to you for doing that. What you want to be doing right now is to move your stop loss to lock in some profit at this point, so that you don't get caught up in any potential pullback that might happen. So now that we have done this and we've taken this, so let's quickly look at what is happening on the higher time frame. Let's look at what is happening, and this is also for those who are not part of the session yesterday, so that you can also have a view into what we were looking at before we took advantage of that move that we took yesterday. So right now, scaling up into the daily time frame, what do we have on the daily time frame? Now, looking at the daily time frame here, we can see that price has been on a bearish momentum since the beginning of the year, as price continued to find lower lows and lower highs. However, something interesting happened during the early days of the month of June, as we can see our price has continued to reject the $11,200 level. So let me zoom in so that we can see what I'm talking about here. So we saw how the $11,200 area has been holding price action supported for a while now. You see, anytime price comes within this area, it has been met with stiff resistance from the buyers, as buyers continue to push price to the upside from the zone. We had another one in the month of June. Then price came back again during the month of September, and throughout the course of the month of September, we saw multiple rejection of this level, giving us a clue into the strength of the buyers at this point in the market. And during the course of the last month, I think during the mid-month stroke, the later part of last month, we were actually looking forward to bullish momentum from this area. But what we saw was that price broke down that structure to the downside to give us a bearish signal. But it turns out that the breakdown was a false one, as we saw an engulfing candle springing out of that structure during the course of yesterday's trading session. So now that we are heading into the new week, as price continued to rally right above the 11,200 area, that is the demand zone we identified here, how do we intend to trade the US tech? Well, let's scale down to the 4 hours time frame and see what is really happening around this area. So now on the 4 hours time frame, what do we have here? We can see we had a structure here at 11,200, which was our guide last week. Remember, we were looking forward to buy an opportunity right above this level last week, but we never saw that opportunity come. And right now we have price breakout of that structure to the upside. And at this point in time, price is within a sell window, which has been an area where participants are respected for selling momentum in the past. You can see this area has been a selling niche. So what I want to be doing here is to identify that structure after bringing out my line chart. So bringing out my line chart right now, and let's identify that structure around that area. So we have something like this. So we do have a structure here. Hold on a second. Misha. So we do have a structure here, and one thing we want to do is to label this structure. So we have the structure at $11,500 mark, which is more or less a very strong psychological level considering the round figure of this price. So we have a structure here. So what we want to do now during the New York session today is to be patient enough to watch how price is going to relate to this level. So remember, we had a breakdown of the structure during the course of last week's trading session. We saw a breakdown, we saw multiple retests of the structure, and this gives us a clue into the selling potential that is around this area. So we have this area as a selling niche for participants in this market. So what we want to be doing right now is to see how price is going to relate to this level during the New York session today, which will now determine how we are going to be trading this. So there are two things we want to be looking out for here. The first thing is that we could be seeing multiple rejection of this level in such a way that price evolves into a reversal pattern to send price crashing to the downside. That is one scenario. And the other scenario is the possibility of price breaking out of that structure, where a retest of structure will give us a confirmation to join the rally to the upside. So now that we've had this view in mind, one thing I would like to state here is that considering the fact that price sprang out of our demand zone on a very strong momentum here, as we saw engulfing candle taking price right out of the demand zone here, if price rejects this, hold on a second, if price rejects the 11,500 area, there is a likelihood that this move could likely be a retracement of this previous impulse leg, and there is a likelihood that price might come into the 11,200 area, where we now see another opportunity to buy the US tech. So now that we have this information, what I'm suggesting here is this: we don't know when this impulse leg is going to end right now. If I had known, I would have brought out my Fibonacci retracement tool to identify the golden zone area where we want to be looking for an opportunity to join the second wave of this bullish momentum. So let's say the bullish momentum ends at 11,500 area. What I would advise you to do is to bring out the Fibonacci retracement tool, run it through this impulse leg here wherever it ends, identify an area between the 50 and the 70.6% area, and we shall be using that area as our buy zone for the second phase of this momentum. So we have this area. Hold on a second, let's label this point. So I'll have it right inside, and then let's make this a yellow color. So this is what I'm talking about here. So we don't know when this impulse leg is going to end. There is a likelihood it's going to end around 11,500, considering the selling opportunities we saw here in the past. So if it does, then we bring out our Fibonacci retracement to run it through this area, then look out for selling opportunities that will lead back into the buy zone here, where we'll be looking out for patterns on lower time frame to join the rally to the upside. And if you are a counter trend trader and we start citing multiple rejection of the 11,500 area, you could take advantage of that counter trend opportunity right back into this zone as your take profit target. We'll be dovetailing to, let's see how many pips that is. That's around 350 pips they're about to catch if price moves like that. So these are the scenarios we are looking forward to on the US tech. So what I'll be advising here is that we'll remain very patient, and if you are still in this buy trade, move your stop loss to protect your position at this point in time, as we don't know how price is going to relate to the 11,500 area. So that is that on the US tech. If you have any question, feel free to drop it in the comment section, and I will be willing to be of help in shedding more light on it. Hello, innocent babe. Good morning to you. Well, I'm doing fine. Trust you are doing well. Please, I don't know if we can sell gold on the current price. Okay, we shall be looking at gold. I think in the next 2 pairs we'll be looking at gold. Okay, so stay tuned in so that you can be part of the session. All right. Okay, glad to hear that you're a good, innocent babe. Okay. Okay, so let's move on to the next pair. So the next pair we are going to be looking at is the USDJPY, and the scenario we've been having on the USDJPY has been quite interesting. Now look at the current structure we have here. We were expecting that price will continue to the upside. Yesterday we had the scenario, we were around this point yesterday. Hold on a second, let's go to our 1 hour chart. Okay, we were around, where were we yesterday? Okay, we were around here yesterday, and remember we had a channel right within the 145 Japanese yen and the 144.200 Japanese yen area. So we saw throughout last week trading session how price was caught within this channel, emphasizing the indecision that is in this market at this point in time. However, during the early hours of this week, we saw bullish momentum which led into the breakout of the 145 Japanese yen area, giving us a signal that we might be having a bullish momentum at this point. So what I did here yesterday was that I took advantage of this move right above this area. I told you yesterday, and I moved my stop loss to break even. And the reason why I moved my stop loss to break even is to protect my position against any sudden pullback that is likely going to be happening at this point. And one of the signals I saw that a possible reversal move could be happening is this sharp rejection of the 145.300 Japanese yen area. And so what we said yesterday was, okay, fine, if price comes back to give us a retest of structure, we want to be joining the rally to the upside. So what happened during the early hours of today, we saw how price came back to respect this bullish trend line that was identified here. So we had this temporary bullish trend line that has been holding price action since last week. So we saw this temporary bullish trend line run through the higher lows here to give us that temporary line. And then we saw price come back into that structure, and at exactly the 144.200 area we saw a sharp rejection, hereby evolving into a reversal pattern in the form of a double bottom structure. And this double bottom structure is not confirmed yet unless we sight a breakout of the neckline. So we had a neckline sitting right around the 144.750 area where I said how we'll be looking for buying opportunity. And lo and behold, we already have a breakout of the structure. We have a breakout of the structure, and since then we've been seeing price do a consolidation phase, hereby emphasizing the indecision in this market. So what I've done here is to buy the USDJPY right above the neckline area at the 144.750 level. And the reason is simply because of this sharp rejection of this bullish trend line, the sharp rejection of this support level of this channel, and as well the evolution of this pattern into a reversal pattern in the form of a double bottom structure are all the parameters I saw that made me think of buying right above the neckline area at the 144.750 area. Now, with that being said, we can't ignore the fact that we are still within a very strong supply zone on the higher time frame. So let me show you what I'm talking about here on the higher time frame. So we are right on the daily time frame here, and one thing we observed here on the daily time frame is that price has been on a very strong bullish momentum. However, something interesting happened since the beginning of the month of September. We saw our price, as soon as it got into the 145 Japanese yen level, we started seeing multiple rejection by the sellers. So all attempts by the buyers to push price right above this level was met with stiff resistance. So in that regard, we were able to identify a supply zone right around that area. So if we scale down to the 4 hours time frame, we'll see things more clearly here. So here on the 4 hours time frame, we had the supply zone right around the 145 Japanese yen level. So we have the supply zone here. So and if you can see what has been happening since last week, we can see price is still within the supply zone. So despite the fact that we are looking for a buy opportunity on the lower time frame, which I showed you earlier, there is a possibility that we could be having a sell momentum. So we need to be very, very careful here. So like I said on the lower time frame, if price continues right above the neckline area at the 144.700, we want to be buying. Now, considering the supply zone we have here, If price breaks the bullish trend line that we identify on the 1 hour time frame, let's go back to the 1 hour time frame so that we can see what I'm talking about here clearly. So here on the 1 hour time frame, this is what we are talking about here. So if at any point in time during the New York session we cite a breakdown of this bullish trend line, well, I want to be seeing this as a signal that the bearish momentum might be coming in. But we are not going to be making a decision yet until we see a retest of structure, which is likely going to come in the form of a retest of the 144.750 area, or probably the bullish trend line here, where we look out for patterns on lower time frame to join the decline to the downside. So we have two scenarios we are looking forward to right now. So we have this one here. If a breakdown of that bullish trend line happens, it shows that price is no longer respecting that bullish trend anymore, as the possible momentum shift is likely going to be pushing price to the downside. However, if price continues to rally right above that bullish trend line, then definitely we don't want to miss out on that bullish momentum right above the 144.750 level. So I'm trying to paint this possible scenario so that when price starts doing this, we are not surprised, or we are not caught within a dilemma, not knowing what to do afterwards. So this is what we are going to be doing. If price breaks down that bullish trend line, a retest of structure should be confirming a downtrend scenario. And if price continues to go right above the 144.750 level, which is the neckline of the reversal pattern we identify here, we saw the rejection of that bullish trend line here, rejection of the 144.200, evolving into a reversal pattern in the form of a double bottom structure, breakout of the neckline, consolidation phase around the neckline area. Right above this area, we will be buying the USDJPY. So that's how we intend to trade the USDJPY for this week. If you have any question or you need more clarification regarding what I've just discussed so far, feel free to drop in your inquiries in the comment section. Good morning, 250097. Good morning, Joselio. How are you today? You are welcome, Innocent Babe. All right, now I guess we have to move on to the next pair. So the next pair we'll be looking at is the XAUUSD, that is the gold metal. I hope Innocent Babe is still around. So we have the XAUUSD right now, and remember yesterday we had a signal in the form of a breakout of the channel where price was at the beginning of the week. So we saw the scenario yesterday. We saw the consolidation phase here, which led into the significant breakout of the structure, which also breaks out the key level that we identified on the daily time. I'll be sharing that with you in a moment after doing a replay of what our expectations are. So yesterday we saw this bullish signal, and what we said yesterday was that, okay, fine, because I, for one, personally, I missed this move yesterday. I missed this bullish move yesterday. And what I was saying is that let's see if the market is going to give us a second chance. And we're actually looking for a second chance in the form of price doing a retracement back into the key level at the $1,680 area, which was broken during the course of yesterday's trading session. So since yesterday now, in the last 24 hours, we are yet to see price come back to do a retest of structure. So on the gold, we have been very idle on the gold as we continue to monitor price action. So there are no trades on the gold yet in the last 24 hours. So let's quickly go into the daily time frame. Let's see what is happening on the daily time frame, so that for those who missed out in the session yesterday will actually know how and why we got to the idea of buying the gold at this point. So now let's scale up to the daily time frame. So what is happening on the daily time frame? First of all, if we look at it from the month of March, we'll notice that price action has been on a very strong bearish momentum, as we can see, after connecting the series of lower highs here to give us that resultant bearish trend line. In addition to the current structure we have here, I was able to identify a very strong key level at a strong psychological point at the $1,680 area. And as you can see, how this level has been a major determinant of price action in the past. We saw here in the month of July where price came into this area and we saw sharp rejection, which led into bullish momentum. Again, fast forward into the early days of the month of September, we saw multiple rejection by the buyers of this level to push price to the upside, but this momentum wasn't that strong as we saw how buying attempts was met with stiff resistance as price broke down the key level at the $1,680 area. So we saw a breakdown, we saw multiple retests of this area to send price crashing to the downside. So as soon as price broke the key level at the $1,680 area, so this is what we saw a breakdown, we saw multiple rejection of the key level leading into this engulfing bearish candle, and price went to as far as the $1,615 level, and since then price has continued to find higher highs, leading to the further breakout of the $1,680 one more time. So right now, this is where we are right now, and what do we intend to do here? How do we intend to trade the gold for the New York session today? Well, if we look at what is happening here on the daily time frame, we can see that price action is right back at the bearish trend line we identified earlier. And what this tells us is that we are right at a very sensitive point, a very sensitive and key area to look out for today. So what we want to be doing here is to be patient enough to see how price is going to relate to this bearish trend line. So in order to do that, what thing we want to be doing here is to scale down to the lower time frame. But before we scale down to the lower time frame, let's see if we are going to be having a structure around here that price has actually respected in the past. So in order to do that, we'll bring out our line chart here, and let's see if we have a structure around that area that we can use as our yardstick going forward. So if we look at the current structure here, we can see that somewhere around the $1,725 area seems most appropriate to be identifying a key level. So we have somewhere here, I think the $1,715 area, I think, okay, somewhere around here. So that's what we have here right now. So if we look into the past, we can see how this level has been a selling niche for participants. We saw the first attempt to sell price here. We saw the second attempt to sell price here in the month of September. And let's see if we are going to be seeing reversal patterns around this area. So for the sake of clarity, let's label that zone. And how do we label that zone? We label it, okay, let's give it 1725, so $1,725 area. So we have a key level sitting right at the $1,725 level. Let's give it a blue color. Okay. So what we want to be doing now as we head into the New York session is to see how price is going to relate with both the bearish trend line and the key level around this area. So are we going to be seeing a situation where price rejects this level? We can see multiple rejection of this area, or probably a reversal pattern to push price to the downside? Or are we going to be seeing a breakout of the structure where a retest of both the $1,725 level or probably the bearish trend line here will be sending price gold to the upside? So these are the two scenarios we want to be looking forward to on the XAUUSD. So let's scale down to the 1 hour time frame and let's see if we really have a pattern at this point in time that we can use as our yardstick as we head into the New York session. So scaling down to the 1 hour time frame right now. So what we want to do now is to look at what is happening around that bearish trend line. So now going into the 1 hour time frame, so this is what we have here. So we saw this impulsive move that we started this week with. We saw price climb up into this area. So we saw this a little retracement into the $1,695 level, and then we saw price climb up again, and then we've been seeing multiple rejection of this area, but this is not really an emphatic reversal structure at this point. So we still need to be very patient. We want to see how price is going to relate with this level at this point. So is this really going to be a reversal pattern here? We are not sure. But one thing I want to say here is that for us to see a reversal pattern here, we want to see price find a lower high. So if we see price breaks down like this, we don't want to get too excited. We want to see price come back, give us a retest of structure in such a way that price does not break the previous high. So we don't want to see price break the previous high to sell. So if we see price come right around this area where we find a lower high, then definitely we want to be scaling down to the lower time frame to look out for selling opportunities with a take profit target sitting right around the $1,675 area. So we want our take profit target to be around this area. We should be dovetailing to, let's see how many pips is that. Let's see how many pips that is going to be. So if we are selling from this area, remember we have not confirmed that we are selling here, as we want to wait for confirmations to happen. So I'm just speculating, if price gives us that signal around that area, then we should be looking at around 3,500 pips to catch here. So at this point in time, we want to remain patient. We want to wait for that signal to happen. And like I said, the signal is going to come in the form of a, engulfing bearish candle, probably breakout of a structure. Price comes back to do a retest of structure. Price does not find a higher high, but instead found a higher low. Then we want to join the decline. So if that happens and price continues to go to the downside, I want to see this as a counter trend opportunity. As we can see, since the beginning, since last week, we have seen our price has consistently found higher highs since last week, giving us a clue that we are on a bullish trend. And any move here that goes to the downside is likely going to be a retracement of that impulse leg. And look at the structure we have here that was broken yesterday. We saw the breakout of a very strong key level, which we identified on the higher time frame at the $1,680 level. And from a technical standpoint like this, whenever we cite a breakout of structure, what do we expect? Of course, we expect that price will come back and do a retest of structure, where we want to be looking out for patterns on lower time frame to join the rally to the upside. So if you are taking advantage of that counter trend opportunity, we want our take profit targets to be right around the $1,680, which is more or less the important key level we identified on the higher time frame. So this is how we intend to trade the XAUUSD for today. So we want to be patient to see how structure is going to play out at this point. So let me see what's happening on the 15 minutes time frame before I move on to the next pair, to see if there is anything we could actually sense that could incite a selling momentum here. So on the higher time, on this 15 minutes time frame here, I'm yet to see any selling momentum here. So what we want to do is so we have a structure around here. We can see how the breakout of that structure here on the 15 minutes time frame was met with stiff resistance of this level. So we can see buyers are still around the $1,705 area. So we can't see any selling momentum yet. The selling momentum will come if price takes out all the buy position here, hereby breaking down the structure. Then a retest of that structure will give us a confirmation to join the decline to the downside. So that's how we want to trade any selling momentum here. If that does not happen, we continue to watch how price action is going to relate with that bearish trend line. So that is that on the XAUUSD. I don't know if Innocent Babe is still around. If you are still around, if you have any question regarding what I've explained so far, you need further clarifications, let me know, and let's see how I can be of help in that regard. Okay? Okay, Innocent Babe. Okay, that's good you're around. Oh, thanks for that confirmation. So it's all clear. So at this point, we move on to the next pair. So the next pair we are going to be looking at is the CHFJPY, which is something we looked at yesterday too as well. And what was our expectation yesterday? Remember what I told you here yesterday, price moved as expected yesterday. I was able to close around 80 pips here on the CHFJPY. And remember what I told you, we were around this point yesterday at right above the 146.500 area. We were around here yesterday, and what I said was that if we see a breakdown retest of that bullish trend line, on the lower time frame, we want to be joining the decline. So we saw price break down the bullish trend line here, and then we took this move. I took this move right here, and immediately I started seeing multiple rejection of the 145.500 area here. I moved my stop loss to somewhere around here as price came back and take me out of my position with about 80 pips thereabout. So if you are taking advantage of that move yesterday, kudos to you for identifying that opportunity. So now that price has come back into our entry zone right around the 146.500 area, well, from a technical standpoint, I'm actually expecting that we are going to be seeing either a rejection of this 146.500 area, or probably the rejection of this trend line here, where an evolution into a reversal pattern will give me another opportunity to join the decline to the downside. So with a take profit target sitting right around the demand zone, around the 144 area, which was identified yesterday, and will be drifting into about 240 pips thereabout. So this is what I'm still looking forward to. So if you are taking advantage of that move yesterday, kudos to you. Definitely you are move your stop loss and made some profit here. So going into the New York session today, we are still expecting that sell momentum to happen. And before I go to the next pair, let me run through what our expectations were on the higher time frame, how we got to this point, so that those who are not part of the session yesterday will have a view of how we got to this point, so they will not miss out on the idea here. So on the daily time frame, what we observed here on the daily time frame was that price has been on a strong bullish momentum, which was evident after drawing the bullish trend line. But something interesting happened during the month of June stroke the early days of the month of September, as we saw attempt was rejected by the sellers here to push price to the upside for good 2 months. So we saw sellers trying to push price to the downside from this area, but something interesting happened in the month of September as we saw a final breakout of that structure, which led price to the highest point it has ever been since 1980. So we saw price move as far as the 151.500 area. That was the highest point price has ever been since 1980. And then we witnessed the intervention of the Bank of Japan here during the later part of, I think 2 weeks ago, we saw the intervention of the Bank of Japan to stop the further devaluation of the Japanese yen, which resulted in this engulfing candle that broke out of the neckline of this reversal pattern. Remember, we took advantage of this move. I think we took about 400 pips here as price came back into the structure that was broken during the early days of the month of September. So hereby supporting our technical perspective of a breakout retest of structure, and price has climbed back into the 148 Japanese yen area. So let's scale down to the 4 hours time frame so that we can see what we saw here, because we saw multiple rejection of this level, which gave us a clue that there will be a selling momentum coming in the form of a breakdown of the neckline of that reversal pattern. So if we scale down to the 4 hours time frame here, what do we have? So we saw the neckline broken to the downside here 2 weeks ago, which we took advantage of. We took advantage of this move, break down the neckline, and we expected that price will come back and do a retest of the neckline area where we identified a sell window. And also we took advantage of this move last week, and we closed last week with 130 pips in profit. And yesterday we expected that price is going to break down that bullish trend line, and it exactly did so. So right now, how do we intend to trade this? I've told you that we're continuing to use this bullish trend line as our yardstick, since we already have a breakdown of that structure, which also lines up with the 146.500 area, and we saw the breakdown happen yesterday. Well, let's look out for a retest of the structure. Let's see how price is going to relate to this level. Are we going to be having multiple rejection of the bullish trend line here? It's in such a way that price climbs right back below the 146.500 area to send price crashing to the downside. So I'm still looking forward to a sell momentum here on the CHFJPY. So let's continue to look forward to that possibility happening going forward. So in order to do that as well, and to make our job easier, what I'll be doing here is to identify a sell window. And to identify a sell window here, let's bring out our Fibonacci extension retracement tool and run it through this previous impulse leg here. And we aim at somewhere between the 50 and the 78.6% of that previous impulse leg as our sell window. So we have something like this. So we have the retracement tool activated. Then we have the sell window right between the 50 and the 78.6 area. So we want to be looking for selling opportunities right within the 146.800 area and the 147.800 area. So let's see if price is going to come within this area to give us a reversal pattern to send price crashing to the downside, or we're going to be having multiple rejection of the 146.500 area to send price to the downside from this level. So let's stay tuned in and be on standby to be able to take advantage of this move when it finally happens. So that's that on the CHFJPY, and then let's move on to the last pair for today, which is the AUDUSD, which was introduced to us yesterday by who was that again? I think who was that again that introduced AUDUSD to us yesterday? Okay. Any comments? I think it was Steamroller who introduced the AUDUSD to us yesterday. So let's quickly look at AUDUSD. AUDUSD was also profitable for some time before we started seeing reversal setups. So this is what we had here on the AUDUSD yesterday on the 1 hour time frame. And where were we yesterday? At the live session yesterday, we were around here right below the 0.64600 level. And one thing I said here is that despite the fact that price has been on a very strong bearish momentum, we still want to look for buying opportunity considering the fact that price has been on a bullish momentum since the beginning of the week. We saw price started the week at the 0.6400 level, and since then price has continued to find higher lows and higher highs. As a result of this, we were able to identify this temporary bullish trend line. And what we did afterwards was to use the 0.64600 area as our yardstick going forward. And we said if we have a breakout retest of that structure, we want to be taking advantage of that move. So in fact, we had two opportunities here. We had one here, and then we had another one here. So if you had missed this move yesterday, that is this breakout yesterday, which moved about how many pips that was? We had about 60 to 70 pips thereabouts before we saw price come back into our entry zone to do a retest of that structure. And what happened? Price moved to as far as the 0.6550 area, which dovetailed to about 93 pips before we started seeing this bearish move to the downside. So right now price has come back into the structure. I don't know how you had traded this, but I'm very sure you would have moved your stop loss to break even as soon as price broke out of that trend line. So we had the breakout of this trend line here, and you will have moved your stop loss to lock in some profit at this point. So now with the current structure we have here, how do we intend to trade the AUDUSD for this week? Well, let's scale up into the daily time frame and let's quickly look at what is happening on the daily time frame, and then we'll come back down to make a decision here. So on the daily time frame, price action has obviously been on a very strong bearish momentum, and as a result of this, I was able to identify two bearish trend lines. So we have the major trend line here, which is the dark thick line on your screen, and then we have the temporary one, which is the dotted black line on your screen. And as you can see here, since the month of April, price has continued to find lower highs and higher lows. And one thing we saw between the month of July stroke the early days of the month of September was that the 0.6700 level had been a major niche for buying opportunity. So we saw one here during the first week of September, but the movement of the buyers was not strong enough as it was met by steep resistance at the resistant level of the descent of the bearish trend line to push price down back into the demand zone, resulting into the further breakdown of that demand area. And from a technical standpoint, whenever we cite a breakdown of structure like this, we expect that price is likely going to come back and do a retest of that structure with the intention of pushing price to the downside. So between in the last 2 weeks now, what have we seen here on the AUDUSD? We have seen a scenario where we saw the impulsive move to the downside here, and since price tested the 0.63500 area, we have continued to see multiple begun to see multiple rejection by the buyers, with the structure evolving into a reversal pattern. So there is a likelihood that we could have price come back into the 0.6700 level, which will be dovetailing to about how many pips that is. That's about 200 pips thereabout. So now with the structure we have here, what I want to do next here is to identify a level on the daily time frame here. The reason why I'm doing that is simply because of this reversal pattern we can see here. And so what I'll be doing here is to identify somewhere around the 0.65100, I think. So we have the 0.65100 area, which let's give this a purple color, and then let's give this. So we have some. Excuse me. So we have something like this, and if we are going to be looking at this from a technical standpoint, sincerely, this reversal pattern can only be mature only if we cite a breakout of the 0.65100 area, after which a retest to structure will give us further confirmation to join the rally to the upside. So at this point in time, the whole scenario is still looking very bearish, as we can see multiple rejection of the 0.65100 area in the last 2 weeks. So this is giving us a clue of how strong that 0.65100 area is strong for selling momentum. So the only time we are going to be buying this is to see a breakout of the 0.65100 area, after which a retest of structure will be giving us further confirmation. And this information I'm sharing with you here is based on the structure we identified on the daily time frame. So now let's scale down to the 1 hour time frame, to a much lower time frame, and let's see what is happening. So we have the 4 hours time frame here, and hold on a second. And as you can see on the 4 hours time frame here, we have a structure that appears to be evolving into a double bottom structure. So we have this scenario here. So what I'm saying here is that a breakout of the 0.65100 area is going to be giving us that signal to go bullish here. So if that does not happen, we continue to remain patient here. And for those who took advantage of that bullish momentum yesterday, what I'll be advising here, if you are still in this trade, definitely you want to move your stop loss to break even, to protect your position against any sudden pullback that might be happening here. And it's already happening already. We are already close to our entry point, and let's see. So let's wait, let's be patient and wait for that move to happen. So a breakout of the 0.65100 area, retest of that structure, then we want to be joining the rally to the upside. However, if price does not continue like that, and judging from what has been happening in the last 2 weeks here, as we can see how this level here has been a very strong selling niche for participants in this market. The same thing has happened during the early hours of today. Then definitely, if price does not break above, well, we want to be looking for selling opportunities. So right now we have a bearish trend line here, which has been broken to the downside, and let's see what happens if price comes back and do a retest of this bearish trend line. Then definitely we want to be looking out for structures on lower time frame that will be supporting a trend continuation to the downside. So, and if we have a breakdown of 0.64600 level, we want to hard position at a retest of that structure to join the rally to the downside. So one thing I'll be saying here is, if we are selling, we should be having our TP target somewhere around the 0.63630 area. And the reason why I'm saying that simply because of the structure we have here. And another thing here is that if price continues to go to the downside as explained here, and price comes within the 0.6400 area, which is the lowest point price has gotten to this week, well, at this point price comes here, you want to move your stop loss to break even or lock in some profit, as we never can tell. This area could reject price to the upside. So that is how we intend to trade the AUDUSD for today. If you have any questions, feel free to drop in your inquiries in the comment section. I'm already 7 to 8 minutes out of my planned schedule here. So if you have any question, feel free to drop it in the comment section. and while I prepare to do a recap of what we talked about today and call it a day. So let me see what's up in the comment section. Boss, good morning, hope you are doing good. Okay, all right. Innocent babe, okay, 2018, you're welcome. Jubaya, good morning. Okay, Innocent babe, you're welcome. All right, let's do a recap of what we talked about today, then we wrap it up. So the first pair we talked about today is the US oil, and we've been enjoying a bullish momentum on the US oil since the beginning of the week. And one thing we saw here is that we had the $84.50 area, which has been a selling niche for participants in the market. We saw a rejection here during the New York session yesterday, and during the early hours of today, we have continued to see multiple rejection of the $84.50. And the first thing I told you here, for those who took advantage of this move from this point yesterday, is that we should move our stop loss to protect our position against any sudden pullback that is likely going to be happening here. So the advice point was right below the 83.50 level, which is right below this channel here, and I was able to identify this bullish trend line here to guide our action, especially for those who are not part of this, those would not take advantage of this bullish move that we took yesterday. So for those who did not take advantage of this bullish move, we have this bullish trend line to make our job easier. So as long as price continues to rally right above that bullish trend line, we want to be joining that bullish momentum. Hello, sorry for that. So we are looking forward to buying momentum right above this bullish trend line. So if we have a breakout of the $84.50 area, a retest of structure will give us further confirmation to join the rally to the upside. And if a further breakout of the $85 mark will support and us adding another position to this trade. So let's be on standby to take advantage of this move when it happens. But if price breaks above this bullish trend line here in such a way that we have a breakdown of this channel, then we want to be looking for selling opportunities at a retest of that structure. So that's how we intend to trade the US oil for today. Then we went on to talk about the US tech, and on the US tech we took advantage of a bullish momentum here, and personally I took about 300 pips here. I opted out of this trade at this point, and if you are still in this trade, I told you to move your stop loss to break even. And for today, what we are looking forward to is this. We already have a key level at the 11,500 area, and we want to see how price is going to relate to this level. So what I said is this: we want to be patient and see what happens. Remember, this level has been a selling niche for participants in this market in the past. We can see how this level has rejected all buying pressure, as selling as this area signifies how strong the sellers are at this point. So what we want to do today is to wait and see how price is going to relate to this level. How we're going to be having multiple rejection of that level in such a way that price action evolves into a reversal pattern to push price to the downside, or are we going to be having a breakout of that structure? And if a breakout happens, we are going to be buying at a retest of structure as price continues to the upside. Now, if a reversal pattern happens here, or probably multiple rejection happens here, and you are a counter trend trader, you might want to take advantage of this move with a take profit target somewhere around the buy zone. And the reason why I said our take profit target should be around this area is, one, we have this area as a demand zone identified on the higher time frame, remember, and then we want to be taking into consideration this impulse leg. So if we have this impulse leg right now, we don't know when this impulse leg is going to end, but wherever it ends, what we want to be doing is to bring out our Fibonacci retracement tool, run it through the impulse leg, and we should be identifying an area between the 50 and the 78.6% of that impulse leg as an area for take profit target if you are taking a counter trend opportunity, and that area also is going to be serving as a buy zone for us. So we are looking for either of this area to take advantage of that move. So that's how we intend to trade the US tech for today. So that's how we intend to trade the US tech for today. Then we moved on to talk about the USDJPY, where we are looking forward to taking advantage of that buy opportunity. And I think my position is already triggered here as price has climbed right above the neckline at the 144.750 area. So we have price break above that key level at the neckline area, and this is what we are looking forward. So price has already been triggered at this point, and if price continue to move to the upside, we want to be locking our profit as price continue to climb up. However, if price comes down and breaks down and takes us out of our position, and we have a breakdown of this bullish trend line here, a retest of structure should be giving us a confirmation to add more to join the decline to the downside. So we have two scenarios on the USDJPY, and though we are still expecting price to climb to the upside considering the demand zone here and the reversal pattern we identify here, we saw a sharp rejection of the zone. We saw price evolve into a double bottom structure, and I'm expecting price to go to the upside. So if at any point in time during the New York session today, price breaks down our bullish trend line here, then a retest of structure should be sending price crashing to the downside. Then we went on to talk about the CHFJPY, where we said we took advantage of this move yesterday, and I told you I locked in about 80 pips here as price climbed back into our entry zone. So we have the 146.500 area as our yardstick going forward. So we continue to look for selling opportunities right below this area, and since in the last 3 hours now, we have seen multiple rejection of this level, which more or less a good signal that is good to sell right below that level. However, there's still a possibility, even if price climbs up into this area, it's still within our sell window to look out for selling opportunities. So on the CHFJPY, we are still looking forward to sell the CHFJPY. Then we went on to talk about the gold, where I told you that if a breakdown of that neckline happens, which has already happened right now, I hope Innocent Babe took advantage of this move right here. So we already saw a breakdown of the 1706, which we identified on the 15 minutes time frame, and this is a good opportunity to join the XAUUSD's decline. And one thing I said here is to have our take profit target right within the buy zone area or the key level at the $1,680 area, which I said is going to be an area we're going to be looking for to join the potential second wave of this bullish momentum. Then we went on to close the day with the AUDUSD, where we started seeing selling momentum here, and though we took advantage of this move yesterday, we took some profit and it wasn't that massive anyway, but price continued to go to the downside. So what I said here is that since we already have the breakdown of that trend line here, a retest of this trend line should give us an opportunity to join the decline to the downside on the AUDUSD. So on this note, I want to call it a day. Thank you very much for being around. I really appreciate every single moment with you guys, and I wish you best of luck during the New York session today. On this note, bye bye.